Good morning, it's Tricia with Easy Emini Trade, and I wanted to go over a couple things from Wednesday, January 6th. And if you'd like to get more information on the setups, you can just go to the website www.easyemintrade.com. And also, if you'd like to attend the webinar on January 21st in the evening at 8 p.m. Eastern, you can also get information there as well. And we'll go over all the setups and a lot of information. So I wanted to go over range trades because yesterday was a perfect day for range trades, and you can see by looking at the 5100 tick chart, very clearly, up, down, up, down, up, down. So when you have a day like that, nice to have something in your arsenal that you can use to take range trades. So we actually took a trade first thing in the morning. We have been willing to take the Keltner channel continuation setup first thing in the morning if everything's in line, and ignore all support and resistance levels, because typically that first few minutes in the morning price will ignore all those areas. So we took this trade, and when it had difficulty getting through this area, we flattened and canceled at break even or for a quarter loss. So no big deal, but it just couldn't get above the close from the previous day. But you'll notice here, so it comes up and then goes right back down to support area. Support area here is 1130.75 from the previous day. This is the floor trader pivot point, and then the dotted line is a 50% retracement. So we trade down to support area, then it starts higher. I wouldn't take this now, considering giving it consideration that it's going to go higher, because it's a little early. We don't know yet that we have a range. It's only 9:40 in the morning. But if somebody did want to take it because you're at support, it would make perfect sense, because you are at the pivot point, which usually ignites a bounce as well as 50% retracement. You do have divergence to the upside, lower low here, while here you have a higher low on your indicator, so you would expect that you would get a little bounce at least. But for me, I would have to have it come up and retest an area of resistance, and so it comes up to the high of the previous day and still cannot go higher, and then it starts to roll over, gets back under the high of the previous day. Now hits the channel. Now we have a higher high here than here, while our indicator we have a lower high here than here, leading us to believe that now price is going to drop. So great, you could take that expecting to get just down to the lower channel. So then an added bonus would be if it actually exceeds your expectations, it doesn't just touch the lower channel, comes back down to support area. That's what it does. So now you're at support again. And another added bonus is that you have divergence to the upside. You have a lower low here than here, while here on your indicator you have a higher low. So now you would expect a bounce. What I'd like to do is, if I'm taking a range trade, rather than just letting it touch the channel and then go short, I like to see it from overbought to go short, oversold to go long. So when it crosses that line, then I would be looking to take something to the upside. And that's just me. When you see that it's repeating itself over and over and over again, you necessarily don't have to wait for that. It's totally up to you. You can, as soon as it gets to support and back inside the channel, boom, go long. So just something that you can mess around with and check it out for yourself. So here we get up again to resistance area, and we actually were looking to try to take something to the upside here. And we actually took the trade. Indicator was above 20 and rising. The high was right around the area that we were getting in the high of the day. So it was questionable whether it was going to be able to get going, because oftentimes it'll hit that high created intraday and then pull right back. So we took it knowing all that in advance, that it might not go anywhere. Our target was right where you see this blue line, and you'll see that price did trade up to that, but unfortunately it wasn't enough to get us out of our position. So that was another flatten and cancel at break even. So then we're back to range trades again. So it fails to go higher there, and then you can see it touches the channel. You have a higher high here than here, lower high here, so you have divergence. So that's not giving us much hope, well, in this trade, that it's going to go higher. So another reason why you might choose to flatten and cancel at your entry or close to your entry, so you don't have to, why take your full stop if it doesn't look like it's going to do what you intended it to do. So what I would suggest in this situation, because we did just make a new high, is, you can wind up going sideways here for, another hour. So wait till you get back under this area of previous resistance, which now will become support. So get back under that, then look to take a short. The only issue is that if you take this here in this area, your channel is right below you. So usually you're expecting just to get to your lower channel, even though we know that support is below, right here at this 50% retracement and at our 1130.75. So totally up to the individual if they're willing to give that a shot. The other option is when the volume does decrease, you can always move to a tick chart, like a 943 tick chart or something along those lines, and it'll look a lot smoother. Won't make the trade go any faster. It just will look smoother, and then you'll have more room likely in between your channels. So just something to consider. So then you get down to support here, lower channel, down to support, and then you could take it here as it's rolling over, or obviously then you had to sit waiting sideways, or you could wait till it gets down to support again, and when it's rolling over from oversold, then you take it higher. Added bonus is that you have divergence, lower low here, higher low here, so you would expect a bounce. So always nice to see that when you're looking to take these range trades. It just gives you a little more added confidence. So then you're up to resistance again, and again I would wait for it to get under the high of the previous day. But you'll notice that when volatility decreases and the volume decreases, during those slow times in the afternoon, you'll notice that your channels are going to get closer together. So like I said, you might want to opt to move over to a tick-based chart, and at that time. But regardless, if you were to take that expecting, to get down to the lower channel, obviously it took a really long time before it actually started to do anything, but then you did get back down to that previous support area of 1130.75 area. Then you're there, and now you actually have divergence here. Lower low here, then here. Well, here you can see your indicator, creeping higher with higher lows. So when back inside the channel and rolling over from oversold, you take it expecting to get back up to resistance or the upper channel. So that's exactly what you get. And so you get the idea. It's just, back and forth over and over and over again. Then, once again, you get back up to a resistance area. This is the area created earlier. And so you're not likely going to take anything here yet if you're doing the way I do, which is I wait for this to roll over, because this never rolls over and then this bar goes higher. Then it fails to go higher, comes back under this area here that was created earlier, much earlier, around 11 o'clock. And then once it comes under there, if you want to take it, you can see that everything's in line here, so you take it expecting just to get down to the lower channel, but if you get lucky you might get back down to a support area. And that's all you have to do over and over and over again. Also, we've been testing the counter channel continuation setups on the Emini Euro, and that's actually going really well. Closing outside the channel with all your indicators in agreement. Here you get above the close of the previous day. You could take it here. We had some resistance when you look at a 15-minute chart right in this area here. So actually, would have opted to wait to get a pullback to the channel. You get it, expecting to get, up toward your floor trader pivot point. And so you would have gotten your first target there. Again, here, you would have gotten your first target, sat through a little bit of wiggles, second target, and then you would have trailed your final third. So we're just still testing that in the sim account, because me, I'm going to have all the details worked out before I'm willing to take those trades. Meaning, I want to know what's realistic to expect as my targets. I want to know what's realistic to use as a stop. So right now, I would say in another week or so, we'll definitely be going live with those, because they are working out surprisingly well, really. So very pleased with that. So anyway, I hope that helps, and I hope you all have a great day, and I will talk to you again soon.